All right, all right, all right, all right. There we go. Hey guys, welcome. There's 23 of you on already, 24. Wow, this is amazing. Okay, cool. So welcome to this evening's live session. Thank you so much for being here. Hold up a second. Let me just change something very, very quickly because I've just clicked on the wrong one. Let me just get rid of that. Not that one. Where is it? Where is that one that I need to get rid of? There we go. Let's get rid of that. There we go. I've got two brands, guys. Sorry. So two companies. One's Conversational Money. One is Money Intelligence. I go into workplaces and do financial well-being talks and stuff and public events with Money Intelligence. So that was a hangover from last week when we had an online event. So welcome, everybody. There's a number of you here already. Where are we right now in terms of the count? We're at 29 of you. This is amazing. So welcome, as always. Literally pop in your questions and I will answer them. I hope everyone is well. Hope everyone is, hey Marcus, welcome. Marcus, part of the members group, welcome. Hope everyone is well. Hope lockdown is treating you well. Although I feel as though it's not really a lockdown, to be honest. I mean, I've gone to the shops and stuff and the roads are as busy as anything. I know a few people have been talking about the fact that they're getting like invites to house parties regardless. So it doesn't really feel like a lockdown. Can you blame people? I don't know, but it is what it is. But let's all just do the right thing. So yeah, I'm going to literally be here this evening to answer questions from you. Just a couple of things, actually. So if you are part of the members group, thank you so much. If you are not part of the members group, it's a really, really interesting community we're starting to build there. We've got people in there who are looking to learn about investing. They're going through my investment course currently at this point in time. We go through it on a Sunday at 8 p.m. Lots of questions. We've got a separate Discord group. So if you are interested about learning about investing and you want access to me for insights, for questions, that kind of stuff, feel free to check out the join button down below. There's a good number of people in there at the moment. We're looking to grow it. But yeah, you get access to me and we can answer investment specific questions. It's all about how we set goals, how we plan financially. I'll be introducing some of my contacts within the investment world to add value on your journey. So definitely consider that this evening. Also, yeah, the channel growth this past couple of weeks has been amazing. And you guys have done this. Today we crossed 7,000 subs. It's crazy because on October 21st, we crossed 5,000 subs. So in just about 3 weeks or so, we've had another 2,000 subscribers basically join the channel. So I want to say thank you to all of you for sharing, for commenting, for liking, for doing what you do in support of the channel. I really do appreciate it. It does not go unnoticed. And yeah, we're aiming for 10,000 now. So thank you for everything that you do. Right, so let's just get stuck in. A couple of people have messaged me questions from the post a little bit early on. So let me start with those actually, because otherwise I am going to forget. So Laura was asking, she's using Trading 212 at the moment. And her question was, what are the tax implications on Trading 212 Invest versus the Trading 212 ISA? So essentially, one thing that is really important to remember, guys, is that if you're using Trading 212 and they have an ISA account, everything within your ISA is completely tax-free, everything. If you're only using the Invest, then you're not going to get the tax-free benefits, so you will be subject to dividend tax, capital gains tax, income tax potentially. So it's really, really worthwhile remembering the difference between the two. So if you are going to be using Trading 212 and you've not used your full £20,000 ISA allowance, start there first. It just makes sense to do it that way. Think tax efficiency. That is the first rule of financial planning. There was another question which was all about using Trading 212 to invest in ETFs. There were Vanguard ETFs that this person was talking about. And the question was similar to Laura's. Should he stop investing in the ETFs with Trading 212 and go and open a stocks and shares ISA with Vanguard? For that, I mean, you could literally just transfer the ETF into a Trading 212 ISA, I'm pretty sure. So, but it would be worthwhile just checking with Trading 212 on how you go about doing that. That would be my advice for that. But that should be should be an easy fix. Let's get stuck in here. Let's see what's going on. So many of you. JK, welcome. First time here. Thank you for joining me. Look, I know it's 9:30 on a Sunday evening, so I do appreciate you being here. Nabir, I'm good. Thank you very much. RDW, hey Pete, hope you're well. Have you seen the Tesla tequila yet? I have seen it, and they sold out literally in one day. I mean, who knew? Who knew? I didn't know that Elon was into Tesla, but I don't know. They sold out in one day, so it might be a big part of the business. It might be another income stream for them. But I like the bottle as well. It's got like a lightning bolt. Very, very nice. Very, very nice. I'm not a tequila person. Otherwise, I would order one when they restock. But yeah, so Marcus, welcome. Airtime, hi, how you doing? Hello. Stephen, hey, I've been watching your channel for a while now. I'm getting myself out of debt and was wondering if you think now is a good time to get into the stock market. I'm thinking Vanguard index funds. Really, really good question, Stephen. If you're getting yourself out of debt, maybe one little thing just to consider before you start investing. So you're getting out of debt, try and make sure that you build yourself an emergency fund. And that could be, emergency fund essentially is your expenses. So how much are your expenses? Your mortgage, your gas, your electric, all the things you have to pay for. If they're like $1,000 a month, for example, then you need probably between 3 to 6 months worth in an emergency fund. That's simply just to give you a little bit of security, a little bit of a fallback, so that if you were to invest and the markets were to go down and you need to replace the car, for example, you didn't have to go back into debt to cover yourself. So think of an emergency fund. But in answering your question, is now a good time to get into the stock market? It's always a good time to get into the stock market, but you have to remember that essentially, whenever you invest, there is a risk that you lose money. So you need to understand why you're investing in the first place, what your goal is. You need to make sure that you've got a plan and invest accordingly. I mean, in times like this where, COVID has ravaged the global markets, the markets did rally off the back of the Pfizer vaccine announcement. And we can see that clearly now because the FTSE is over 6,000 again now. I think it was 6,600 or something like that, if memory serves me right, last week. It is a good time to invest. So definitely consider doing it. Vanguard is a great place to start. Really, really low cost funds. And they have a good range of funds as well. So great time to start investing. Vanguard is a really, really good place to start. But do consider trying to get yourself an emergency fund. You get to pick whether you have 3 months or 6 months. But definitely get an emergency fund. Definitely. So Joe, right. I still work as a delivery driver. Have this whole time in central London. Okay, cool. Good man. Run. Thanks again for the video about pensions. Upon checking, I realized that with 8% contribution, my employer will add 12%. That's awesome. That is really, really good, mate. So for you, oh, wow. Okay, so they've actually done more than match you. They've actually gone over and above. I mean, that's really, really good. I mean, to be in a business, and someone else messaged me on Instagram about this, actually. His employer had some ridiculous offer, like just opening Sava was like 9% contribution. And that's how you know that you work for a really good employer, if they care about you and your future by the level of contributions they're willing to make into a pension. So for you, 20% going into a pension every single year is really, really good. And it's just about making sure you keep that consistency and, you really keep on that journey. So really, really good, mate. That's awesome. It's really, really great. Yes, Marcus, 10K on the way. Absolutely. Right. Okay. So, Yaha Snow. Hi. What do you think of Lloyd shares and shares in banks worth pursuing? Also, for a novice who wants to buy shares, do you think trading 212 is a sound start? Shares in banks. Shares in banks are okay. Banks have had their challenges, really. They've had a whole history of PPI. They've had the financial crash. A lot of them keep getting fines. Even though I work in the financial services sector, and I have to be careful with what I say here because I don't want this to be construed as advice, I don't have a really good kind of like outlook on banks. I just think that some of the old banks are just way too big. They're way too slow, they're way too cumbersome, really. I haven't banked with one of the big six for years and years and years. I use Starling now. If Starling or someone like that were to float, I'd buy shares, but in Lloyd's I personally wouldn't. That isn't to say that you shouldn't, though. I mean, I think the benefit that you have with banks is that they have been around for a while. They are too big to fail. They'll probably get bailouts by the government. And as long as you're buying it with the view that you think that that particular bank, so Lloyd's in this example, would perform over the long term and generate some returns and help you create wealth, then there's nothing wrong with buying or taking a small holding in Lloyd's as part of your overall portfolio. Trading 212 is a very, very good place to start. Another place that is worthwhile starting, and actually, guys, I will post a link in the comments here very, very quickly, because I have been reviewing Stake. And the reason why I've been reviewing Stake, and I think really, really highly of it, is because of some of the analyst ratings that they have available within their app. And look, it's not for everybody. They do have their limitations. But if you're looking to research particular stocks and you want some insights from, what do JP Morgan or some of the big investment houses think about a particular stock, then their analyst ratings are really, really good. They give you an indication of whether whether JP Morgan, for example, or a big investment house sees that stock as a buy, a sell, or a hold. And you can use that to either prove your research right, prove your instincts right, or to discount your research and discount what your initial feelings are. I'm going to post a link to them in the comments in a minute. If you use that link, you will get a free share in either Nike, GoPro, or Dropbox. The only caveat is you have to fund your account within 24 hours of opening the account. I forgot to do mine, so I didn't get a free share because I didn't realize. But that's just a little caveat. You fund it with 50 quid, but you can either get a free share in Nike, GoPro, or Dropbox. So definitely have a look at them. It's really, really worthwhile. Even if you use them as an additional tool for your research when you're picking funds in Trading 212, very, very worthwhile, because the analyst rating is just golden. I was really, really surprised when I saw it. In professional investment managers use that to manage their funds and decide whether they're going to hold a stock or sell a stock. So it's a really good tool to have as a retail investor. Right, there's quite a few questions in here, so let's see if we can actually just power through these. Lloyd's, we've answered. Nathaniel, evening, I dropped you a DM on IG. Nathaniel, let's have a look. Nathaniel, I think I came back to you. Let me just double check though. Let me just double check. I can't see you on here. Do you mind typing that question back in, Nathaniel, if I haven't already answered it? If that's okay, please, bud. Call sign. Just watch your Insta. Would you say it's fair to just want to have more comfortable lifestyle rather than the millionaire life? Not that I wouldn't say no to be a millionaire. This is a really, really, really good question. Okay, so here's my take on this. I think that social media kind of puts this narrative out there that you have to be rich, you have to be a millionaire in order to be successful, or in order to live a comfortable life. And I just think that is absolute BS. I think it's just completely untrue. I think ultimately the bigger thing that everyone should be thinking about, and certainly that I think about, and I know this because of personal experience and being in a position where I had pneumonia last year and I almost died. The most important thing is being able to achieve some kind of balance, some kind of sense of fulfillment, some kind of sense of happiness in life. And if you can generate enough money to enable you to do that, that is the goal. The goal isn't to be rich. The goal isn't to be a millionaire. I know millionaires who are miserable, who are in debt, highly leveraged, who just freaking hate life because everybody around them they think wants them or wants to be friends with them because of their money. So my personal take on it is, well, that's not the goal. The goal is to be happy. The goal is to use money as a tool to help you do the things that you want to do in life, not money for the sake of having money. If you invest and you become a millionaire, you become wealthy, absolutely, byproduct. That's fantastic. But money, in my opinion, is always a byproduct of good work. Not hard work, good work. Always a byproduct of good work. And that's my take on it. That's what I really, really, really do believe. Just from being in the industry, being around money, being around people who have a load of money and seeing how they actually see life in the end. It's really, really bizarre because, you know, my parents are broke. I didn't come from money. And you think that when you have a load of money that you're going to be okay. But when you observe some of these people, they're just absolutely, they're miserable. And some of them can be really, really horrible as well. Well, what's the use of that? So for me, it's all about balance. If you become wealthy and become rich and become a millionaire off the back of investing, fantastic. But that shouldn't be the goal. Happiness, fulfillment, balance should be the goal. RDW, I listened to your podcast with the guy from Stake, and the app sounds great, but do they have a date for an ISA? At the moment, it's in the works for 21. So I think what's happened with them, interestingly, is they're massive in Australia. So they're like groundbreakers in Australia in terms of the, you know, commission-free access to the markets and stuff. They arrived in the UK, and then they realized, oh, there's a load of stuff that we don't yet have. So they've got a calendar of things that they want to roll out, but they just they don't have it yet. So from having a chat with him, it's in the works for 21. So again, if you're going to use them, even if you just use them, get a free share, but use them as a source of research, it's definitely worthwhile. So you can use that to back up what you're seeing in Trading 212 with the analyst ratings. But the ISA is in the calendars for 21. There isn't a particular date for it just yet. Daniel, hey Pete, what's your thoughts on penny stocks? Risky? Yes, very, very risky. Some people do well off it though. I just think that if you're going to invest, there's nothing wrong with maybe having, like, I don't know, 5% of your portfolio in a penny stocks, right? It depends whether you have the appetite for it. But why not just go for some of the big stable guys with a bit of a track record? Yes, the rewards, the potential rewards are so much higher with a penny stock, but I wouldn't overly go and put a ton of money into it just hoping that you're going to get lucky. You might, but you might also not get lucky. And the whole point of investing is to make sure that you try and stack the odds in your favor as much as possible. It's not gambling. So yeah, penny stocks good for a portion of your portfolio. I wouldn't put a significant amount into it by any stretch of the imagination at all. T, what's your thoughts? What's your view on the recent Chinese EV stock volatility and any useful advice on psychological behavior whilst investing? Really, really, really good question there. So, I mean, my thoughts are this. The EV market in China is absolutely huge. I mean, they recently just extended their EV incentive, and it's to the tune of like 396 billion or something like that. It's ridiculous. It's absolutely huge. Now, if you know the Chinese market is absolutely massive. For the Chinese, it's not good enough that you have Tesla, who are now manufacturing cars out of China and selling a shed load of units. The way the Chinese work is that they want to be the heads of their own industry. They have to have their own national company that is good or leading the charge in a particular sector. They're just built that way. They are very, very competitive. So the market is huge. The potential is absolutely huge. Yes, it's going to be volatile. One of the things that, you know, does run in its favor for the markets in China is the fact that they have committed to going fossil free. And they don't necessarily run by the same rules as what, you know, the UK or America will, where, you know, they'll consider things and take their time with things. They will just be like, you know what, this is what we're going to do, and they'll just go do it. And they'll just, if they piss people off, they piss people off. That's how they're built. That's a good thing. But at the same time, if you're going to be looking at companies like Neo and Xpeng, for example, I think that's how you pronounce it, it's really just important to kind of look into the businesses themselves. I mean, I did a video on Stake where I bought some Neo stock. I put a very small amount into Neo just to, you know, sort of test that app out. You know, you need to look at the what's underneath the bonnet when it comes to these companies. So, for example, with Neo, yeah, it's manufactured. They've got a manufacturing facility. It's run and funded by the Chinese government. They have a 5-year contract. The contract does include a clause to say that if the manufacturing line has any losses, the company has to fund it. So that could be a drag on profits. The fact that it's actually funded and manufactured and run by the Chinese government also could be seen as a negative, because how are they going to vertically integrate? How are they going to scale the business? How much control does the Chinese government want to continue to have over the business? You know, in the EV market, because it is such a cost intensive industry, it is all about how you can eke out as much value on the unit price of the cars in terms of profitability. If you've got the Chinese government running the manufacturing line, how much can they scale? How much profitability can they eke out on each unit sale? So that's a really, really big concern and something that's worthwhile considering for them as well. And a lot of the ideas that they have, they've still got to build it. They've still got to build the battery as a service. They've still got to build the whole idea where you rock up to a charging station, you swap out the battery in 5 minutes. These are all great ideas, but they still have to scale and actually build these things and put them into motion. But, you know, they're a great company. Software, the AI, they want to do similar to what Tesla have been working towards for years, and that is the ability for you to purchase a car. It takes you to work. It will go out and actually earn money for you. So essentially turning the car from a liability into an asset, an income generating asset. So all those things are positives for the company, but you know, the Chinese economy and the Chinese market for this, with it being as volatile, you have to keep a good eye on what's going on out there. And the Chinese government does not answer to anybody. They do what they feel is right for them. But they do have a huge commitment in terms of psychological behavior whilst investing. Listen, it's all about mindset. You really do have to have a clear goal when you're going in. And, you know, diversification and spreading your risk is really, really, really important. If you're going into this with the wrong mindset, you know, you're going to get rich overnight. Well, guess what? When the market tanks, you're going to be really worried and you'll probably panic and be anxious and have a really horrible time. So having a really clear goal and being realistic around what your goal is, i.e. not investing because you want to get rich, that's really, really important. You know, these things don't happen overnight. So psychology, have a clear goal. Have a plan behind that goal, because your plan is really going to help you execute and achieve your goal potentially. Najid, as a new trader, I have a demo account as I'm not confident. However, what do you believe is the best trading website as well as an investing account? Okay, I don't trade. I know enough about trading. I don't have the temperament for it. So I'm not really probably the best person to actually ask for this. I do... Trading is one of the topics I always get a question of, and I'm actually thinking about actually getting on here and in the members group as well. A friend of mine who does a really good, who actually trades, and he's very, 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 very good. He'll probably be best placed to actually answer this. But one thing I would say is this: if you're trading on the demo account, it's not the real thing. It's not the same thing. It's very, very easy for you to go and place a bet, or, you know, trade on a demo account and make a 10% and think, yeah, you're world conquering and all that kind of stuff. The psychology is very, very different when you switch to a live account and it's your money and you're worried about losing money, because essentially with a demo account, unless you use it for an extended period of time and you start to journal what you're doing, you're trading, you start to develop your own style, you understand what discipline works for you. You know, how are you going to be trading? How much are you willing to risk on a day-to-day basis versus how much are you willing to gain, right? Unless you've got all of these basic things in place, whilst you're using a demo account, you're going to learn very little from it. Very, very little from it. So I'm probably not the best person to ask for the trading. I know the things that people like IG, eToro, they're really, really good for trading specifically, but it's not something that I dabble in. I don't have the temperament for it, even though I do know quite a bit. I don't have the patience to sit here and watch screens all day. It's just not me. Airtime, what happened to Neo? Are they going to crash? So Neo was interesting. I think it was either on Thursday or Friday. The intraday trading went up to $54, and I think what happened from that point was that a lot of people thought, oh, we've made a lot of money, so let's profit take, and that's why it's gone down. I didn't look at it beyond Friday. I think it was back down to something like $42, $43 when I last checked. But, you know, these things are to be expected. I was watching a video where they were talking specifically about Neo, and they were saying that the Neo stock price was forecasted to be around about $40 in 2 years' time. That's what they were forecasting. So when you watch that and you see it go to like 54, no wonder people have profit taken. Absolutely. I would as well, because it's performing way better than anybody ever thought. So naturally, you're going to have those guys who are thinking, you know what, let's take some profits now because we've made a bit of cash. I mean, just look at the stock price. I mean, 3 months ago, it was like, what, 20 odd dollars? It's crazy. It's crazy growth that it's had. So what happens to it in the future, who knows? Hopefully it kind of bumbles around and stays around there, or kind of just, you know, increases in value steadily. But it's seen some ridiculous growth for a relatively new company that isn't really posting any profits right now. So those are my views on Neo. Let's have a look. Hi, I've answered that. Yeah, hi. Can you sell stocks in your ISA and use the profits to buy more stocks into the ISA without losing the tax protection? And keep doing this as much as you want, even after the tax year has finished. Okay. Sell stocks in your ISA to buy new stocks in your ISA. I mean, you might have to explain this a little bit more, J-Man, because that, for me, that kind of, I don't get why you would do that. I mean, unless you're thinking that there's some other way. I don't know whether you're referring to dividends. But if your ISA account is growing, there's no point in you cashing it in and then buying new stock when you can just hold the value of the stocks and just keep going in. Unless you want to take some profits and buy some other companies, then you could do that. There's nothing wrong with that. So anything within an ISA is completely tax-free. When you cash it in, it's completely tax-free. If you reinvest it into an ISA, it's going to remain tax-free. So you'll be fine from that point of view. You're going to have the protection. But I'm just trying to get my head around your thought of selling to buy new stocks. If it's dividend, you're looking to take your dividends and buy new stocks, and that makes sense. But if you're buying, well, I guess I could see how it worked, but I just don't necessarily get the logic based from that comment there. But you will still have the protections. That's the short answer. Please, let's discuss Neo. We just kind of covered a little bit more on Neo there and my views on Neo there. Hey Pete, hey member again, how you doing? Thanks for all your help. I'm learning lots. Thank you. So Bavari is actually part of the members group, and we meet every Sunday at 8 p.m. Where we just go through the investment course and answer and ask a lot of very specific questions. So I appreciate you for being here as well, especially after you've been with me at 8 o'clock for an hour. So thank you so much. Thanks for being here. Fitz, how you doing? Hey Jim, how you doing? Steve, best platform for long-term investments, eToro versus Trading 212. I would say they're pretty close. eToro is really, really good because you get a little bit more research. You can do a little bit more in eToro. You can do all like the copy. You can copy the trades. For a new beginner, that's probably okay. But again, you just need to be careful that because you're copying a trader, your circumstances may be very, very different to him. So you've got a little bit more capability in eToro than Trading 212, but I would say they're pretty on par. I mean, I hold stuff in Trading 212, not eToro. But I am due to do another eToro video very, very shortly. But they are pretty much the same. You just got a little bit more capabilities within eToro, in my opinion. Let's have a look. Peasant, here we go. Which stock would you recommend to invest in for long-term investments and a decent growth? Right, I can't tell you to go and invest in a particular stock because that will be classed as advice. And even I can get something wrong in terms of an actual stock pick. If you are going to be having a look at stocks, then it's really, really important that you do your research around, number one, what is your investment goal? If you're looking to invest for growth, then you may want to be picking maybe some new incumbents into the markets. For example, looking across different sectors. If you've got a particular sector that interests you, it might be, I don't know, construction, for example, then you may want to use that as your basis of research for companies within that sector that might be new incumbents with something new that they're bringing to the table. But I'm not going to recommend any particular one stock because that will be classed as advice, and I can't do that. What I would say is, look at the sectors that you're interested in and absolutely do some research around specific companies, and only buy companies that you're really, really confident or really, really into in terms of you understand what they're doing and you believe in what they're doing as well. So for example, for me, it's Tesla. I really do believe in the vision that Elon has. I love the business. I love the products. I love the car. And I think that actually, you know what? In the scheme of things, what they're looking to change is effectively the world. They're looking to impact the world in a bigger way and move to sustainable energy. For me, that's something I can get behind. That's why I've got Tesla stock. Right, kind of lost my track here. Bear me 1 second while I just try and find where I am with these questions. Where are we? Where are we? Here we go. Okay, cool. I'm back now. So Tribal. Okay, I've sold my house P and need to invest my money from my house sale as I'm going to rent, and it's well over 20,000. I cannot put it into an ISA. Is it worth seeing a financial advisor? It depends on how much you're looking at, and it depends on when you say invest, how long you're going to invest for. If you're selling a house, then you're probably going to be in the hundreds of thousands. It's all going to depend on your access. What access do you need? Over what period of time? Are you going to be buying a new house? What's your overall situation? It may be worthwhile you seeing a financial advisor to actually sit down and actually plan this properly, but your term, your access, your personal circumstances are a big consideration when it comes to this specifically. Also, whether you're married or not, whether you've got a partner, that will be a big consideration in terms of where you put the money. But yeah, it could be worthwhile you seeing a financial advisor. If you want to drop me a message on IG, mate, I might be able to point you in the right direction and give you a little bit more of a clearer answer. But I have a load of questions for you there. But those are just some key considerations. So, but it could be worthwhile you seeing a financial advisor, depending on the amount that you've got. Al, hey Pete, hope you're well. Dude, just came on to say hello. Welcome. Also, I'm up £200 on BO already. Gone up to £1.45 now. Don't say you didn't meet. Yeah. Well, listen, it's a good. Just off the back of the Pfizer announcement, like just off the back of that, you've seen the rally in these companies, which is why, you know, if you look at recovery stocks right now, Jesus Christ, you can get some really good growth relatively quickly, especially if the what's it called, the vaccine is viable and it does work. Then these company stock prices, you'll see that the confidence will return. And as people start to travel more and go on holiday more, go on cruises more, you'll see that actually as the quarters roll by, you'll get some really good returns. So, mate, that's a really good buy. I'm happy for you, mate. Cheers. Fitzum, hi Pete. Any ideas on how to trade options in the UK? To trade options in the UK, well, you can use most of the trading platforms. So eToro, I know that you can do it on there, for example. I'm not sure if you can do it on Trading 212, but you can definitely do that on eToro. Darren, do you have any update on CashFX? Last you said you were signing up. Look at it from the inside. I do have an update on them. I do, but I'm very reticent about putting another video out about them because there's so much negativity about that company. For me, simply pointing out that they are on the FCA register with a warning because they're not regulated in the UK. I've spoken to the guys at EverFX. I've spoken to a guy who is also one of the execs in CashFX. I've now sat in on about 4 or 5 presentations of theirs, and I think I know what they're doing. And if I'm right in what they're doing, it's highly dodgy. I'm reticent about putting out a video because I don't want the negativity on my channel, mate. If I'm completely honest, I just don't. And ironically, with CashFX, the people who are the ones that are screaming the most are the ones who are roping other people into the scheme so that they can make money off them. And for me, that is completely unacceptable. Like, there is no due diligence when you transfer money to them. You're doing it in Bitcoin. Like a terrorist could transfer money in Bitcoin and use them as money laundering. There are no checks whatsoever. That for me is a big red flag. And I'm reticent about, because I was going to make the video this week. I was going to make it last week and I was like, I can't be bothered. There is so much negativity around it because the guys who are making the real money, the serious money, are the ones who are roping in people after people after people, getting paid on the people that these people introduce into the business on their multi-level marketing scheme. That, for me, I don't want the negativity. I I just don't want to do it, to be completely honest. But that doesn't mean I'm not going to put one out. I'm still thinking about it at the moment. There's still no evidence of the trading. I spoke to the guys at EveroFX, and as far as they're concerned, well, they've got an agreement with a client. It's not a partnership. They have an agreement with EveroFX. It's not a partnership. As they have an agreement with EveroFX, yes, EveroFX is going to come on webinars and all that kind of stuff as part of their agreement. But when I asked them specifically about, well, why aren't they registered in the UK? Their words were, well, as far as our understandings, they don't require it. But they do require regulation here in the UK because, number one, they are marketing indirectly, so that falls under financial promotions, and they're handling client money. So when you deposit your $300 in Bitcoin or $500 in Bitcoin, the money goes to CashFX directly. That is called handling client money. That requires FCA registration. The simple answer to this is just get registered. Get registered, and people like me wouldn't put out videos like that stating the obvious, but they don't want to. And for me, that's where it becomes very murky. It becomes very untrustworthy because you don't even know who owns the business. I mean, they're talking about Haskar Lopez. I've been trying to get hold of that guy. I got the guy who's an executive to try and get hold of that guy to speak to me. Wouldn't do it. I've invited numerous people from within the business to come and speak to me. Won't do it. So if you can't identify who owns the company and the company's out in Panama, for me, what the hell is going on? You know, so I have got an update, but I just don't want the negativity, mate. So that's the answer on that, to be fair. Okay, let's have a look. Where am I? There's a conversation here. Really good conversation. Thank you very much. Okay, Duncan. Hi. In the eyes of HMRC, am I able to buy and sell stocks using ISAs while holding a full-time job? Is there a limit to how many trades per day, per month? No, there aren't, mate. So as long as you have it in an ISA, it's completely tax-free, free from income tax, capital gains tax, free from dividends tax. So you can do as many trades as you basically want, and you don't have to pay any tax. HMRC will be completely okay with that. So you're well within the rules. Martin P, could you explain ETF synthetic versus ETF physical? One better than the other and risk. Okay, so a synthetic ETF is basically like a copy or a clone of an original ETF or a physical ETF. So the way I'd explain this is, you might say have like an ETF which will be like it will be an S&P 500. It basically means that someone will make a synthetic of that S&P 500 ETF. Essentially, it's almost like a copy. In terms of risks, they will work fundamentally the same, I would imagine. It's all just going to be about whether they actually replicate the content of the ETF down to the minutia. That will be where I'd have a look at. But I mean, it's an ETF at the end of the day, so you'll still be able to trade it as long as the market is essentially open. I haven't come across that many sort of synthetic ETFs, if I'm completely honest. I'd love to know where you found those. But that's essentially what an ETF is. It's basically a copy of another ETF. It's a synthetic. It's a derivative of another physical ETF. Now, there's a conversation there, so make sure I go through that. Well, let's have a look at this, because there was a question in here as well. Duncan, you're able to put up to £20,000 in an ISA and any profits that are tax-free, I believe. Yeah, you are right with that, Al. That's absolutely spot on. Duncan, like I'm able to day trade stocks using Trading 212 ISA. I believe you can. I haven't tried it myself, because with Trading 212, you can literally buy and you can just sell at any given time. So there shouldn't be any restriction on you actually day trading the stocks if you wanted to within a Trading 212 ISA. I don't see any physical or technical restrictions that Trading 212 would put on you. I would definitely ask the question of Trading 212 though, just to be sure. But initial thoughts are that you wouldn't have any restrictions at all. Andy Happy, are you liable for capital gains tax if you gifted money from a parent and invest in an ISA? Does this avoid it? As it's normally you would be liable if you make money from gifted sums. Thanks. So it depends on, so typically when it comes to gifting, there's a 7-year rule, and this will be applicable to your parents. So for example, if your parents gave you money, then if it's a gift, they have a 7-year rule. So there's a clock essentially. And if they were to die, for example, within 7 years, then there's tax to pay on that gift. Now, if you receive that gift and you put it into an ISA, then technically, because it's going into an ISA, it should all be tax free. So you would negate capital gains tax, dividends tax, and you'll also negate income tax as well. Those are my initial thoughts on it. But again, you don't really need to worry about your parents' side as such, because it will fall outside of their estate after 7 years. But just in the physical transaction from them to you as a gift, if you put it into an ISA is tax free, so you should be okay and be protected because it's in an ISA investment. Any helpful tools? Right, any helpful tool works with Trading 212. Let me know what you mean by that, Fitz. Right, there's a conversation here. Let me just get through that. Let's have a look. There's a lot of penis comments in there. I don't know. Is that directed at me? I have no idea. You tell me. Who is that? There is no name. Funny that, eh? Let's have a look. Lara, hi Pete. Is it possible to have Vanguard and Trading 212 invest? Okay. Is there tax implications? No. You can have like an investment with Trading 212. You can have an investment with Vanguard. That's completely fine. You would just need to make sure that if you're doing a tax return, that essentially that you're looking at any capital gains or dividends or anything like that from both accounts and reporting each of them in your tax return. So yeah, there's nothing wrong with having two, but you do need to make sure that if you're doing a tax return, you're reporting both accurately, and you're obviously tracking it against your tax allowances as well. What companies? Well, I'm guessing this means Gabriel. I'm guessing you're asking what companies I hold stocks in. So I've got a few. I've got Tesla. I've got Amazon. No, I've got Tesla. I've got Disney. I've got AstraZeneca. I've got Under Armour. I've got about 20 or so now that I hold stocks in from different sectors. But I do have quite a few tech in there. I've got Apple, Facebook as well. JK, I heard you can purchase house through SIPs. If so, how much money do you have to have in your pension pot in order to buy a house? Any thoughts? Okay. JK, you need advice for this. You need to see a financial advisor, because with a SIP, whilst it is a pension, a SIP has its own governing rules. So yes, you can buy property in a SIP. It depends on how you're going to buy it though. So you need to see a financial advisor for that. To make sure that you're doing it in the right way and in the most tax efficient way as well. So seek financial advice on this. But yes, you can put property into a SIP. Sometimes what they do is they base it on the value of your pension pot. So for example, if you had £400,000 in there, for example, you could either take that full £400,000, go pay for the property outright, or you could possibly have a look at maybe how you actually leverage it for loans, for example, to purchase the house. But again, you need to see a financial advisor to make sure you get it right. It's not something you should venture to do on your own. Uga, hi Pete, could you please briefly go into how I can buy shares with certificates? What do you mean specifically with certificates? If you're buying shares these days, it's very, very rare that you get like a certificate. You'll get like a contract note, essentially. So if you're using Trading 212 or Stake, you purchase, you execute the trade, and what they'll do is they'll send you an email with a contract note. And that's it. You don't get certificates anymore. Unless you're referring to something else, please do let me know. Neil was up and down on Friday, bro. I know it was. Hey, Jack's online here. Cheers, mate. Congrats on 7,000. Appreciate it. Okay, let's have a look. Neo is too much of a Chinese pump, in my opinion. Maybe back in it when it drops to $25. Yeah, probably good shout. Good shout. But the question is it going to go back down to $25? That's always the unknown. Always the unknown. T, smash the like button. Thank you so much. Drago, how you doing? That's another member, by the way. Welcome, welcome, welcome. At some point, it actually makes a group meeting. Yeah. You've missed every single one that we've had so far, mate. So this one has been recorded, so it will be on. I'll upload it tomorrow, so you can actually view it. So you'll be able to look back at this, the video for today. We were in chapter 2 of the investment course today. We were talking about investment timeline, risk aversion, loss aversion, I should say, sorry, and risk. So you'll be able to view that back, but you do have access to the videos as well. If you're not in the Discord group, Jago, get into the Discord group. If you have any questions once you watch the videos, ping the message into the Discord and I'll answer them myself. And if you do want to catch up on them, let me know. And what I might be able to do is just run like a group, because I know that there's maybe another 2 of you that haven't been able to make the lives on Sunday, the meetings on Sunday. So I might run like a little private little group for you guys. So just let me know in the Discord if you've not already joined it, mate. We can go from there. Nathaniel, can you have a help to buy ISA and a normal cash ISA running at the same time? Yes, you can. There's nothing wrong with that. Your help to buy ISA only allows you to save a certain amount. I think the limit is £12,000. So if you look at it, your ISA allowance as £20,000 per year, then yeah, it's fine for you to have a help to buy ISA and a cash ISA at the same time. David Tran, are there any particular platforms, websites you recommend for researching companies and news? Yes, actually, I just came across one on Friday. I want to vet it before I actually talk about it, though. But really, really good. Actually, what they do is they actually score all of the companies, and they write like a literal review as well. Really, really good company. But in terms of like financial research, so I subscribe to a number of newsletters. So there's a lady called Beth Kundig. She's a professional investor. I get her newsletter. She talks a lot about the tech sector specifically and some other sectors. But if you can find any newsletters from, I don't know, say, for example, Kathy Woods and the ARC guys, if they've got a newsletter, subscribe to that. That will help you with your research. It will help you with getting insight to maybe some information that you won't be privy to. I also watch a lot of financial news and read a lot of financial news as well. So if you're looking at some of the US stock market news companies, for example, listen to those and read, Financial Times. Things like that will always help you generate the knowledge that you basically need. But newsletters are always very good. So if you have any favorite investors that have newsletters, go and subscribe to those. But Beth Kundig, so it's Kundig, Beth. If you Google her, she's really, really good. She sends out a newsletter every 2 weeks or so. Ugar, how would I go about finding and researching small companies all the companies want to invest in are big? So again, another source, Hargreaves Lansdown. So for example, TikTok have got an IPO pending. So they send out regular newsletters and bulletins about potential new IPOs, that kind of stuff. So, go onto these providers. Hargreaves Lansdown is certainly one of them. Subscribe to their newsletter. You'll get a source of information from there. Bavari, hey Pete, any good resources to do research? I know you mentioned Beth K. Yeah, Stake and any websites. Is Investopedia a reliable source? Investopedia is also very, very good. There's a little theme there on the questions. Investopedia is very, very good as well as a source of income. But Beth K, if you can get into the Archivist, I don't know if Kathy actually has a newsletter or not, but if she has, that will be a good one to get into. Hargreaves Lansdown newsletter, also very, very good as well. Al, I'm all about those recovery stocks right now. I believe if vaccine is safe, we are going to see a massive rotation out of tech. That's very, very true, mate. I think tech has always has kind of been the safe haven that everybody's actually gone to since obviously the pandemic. So yeah, it'll be interesting to see what basically happens. But hopefully the vaccine is viable and it does work and it does get rolled out soon. Cool. So thanks for the explanation. And then what's your thoughts on Jumia Technologies? Jumia is interesting. I mean, it's billed to be the Amazon of Africa, right? I don't know. I would have to do a little bit more research on them before I went into a company like that. The thing that concerns me with Africa is the infrastructure. Basically, I'd have to look at how the infrastructure is. Africa is also a cash economy as well, pretty much. I mean, they've got a transition to make. But most countries in Africa are still a cash economy by most measurements. And, broadband, they're still behind on broadband stuff. That isn't necessarily a bad thing. But, it means that actually they could be really, really well positioned to really take this by storm. I don't know. I would just have to have a further look into them. They have been mentioned to me before, and I have done a little bit of reading, but I haven't done enough reading at the moment to really give you like a full kind of like insight into what my thoughts are about it. But maybe one that we revisit might be one that I actually do a video on as well. Kenny, is anybody else sick of the so-called so-and-so reacts to videos from the finance people on YouTube? Don't do it, Pete. Yeah, the react to videos, they're interesting, really, to be fair. There's some of them that I found really, really interesting. I think there was a lady in London. I can't remember what she was saying or something like that. She was saying on, like, I don't know what a wage was. She was talking about she was working for a publication or something like that. She was on ridiculous money. And there was a reaction to her, and I thought that was really, really, really interesting, some of the reactions, but it's not something that I plan on doing. I don't know, it's just weird. Let's have a look. Just lost my track here, 1 second. Let me just see if I can find where I was. Okay, Bavare, also a bit of a silly question. Would you explain what exactly happens to your money when you buy a stock when it's deposited? Okay, so if you, like, depending on who you essentially use, because so for example, Trading 212, I think, because they've just changed their contract with Trading 212 in terms of how it's actually held and stuff. But typically what tends to happen is you place an order for a stock and they execute that order for you, and it's held within your account under a client account, essentially. So you then have the ability to either redeem that at any given time. Providers might have different nuances in terms of how they actually have the operation of that actually works. So that will be more of a question for the providers specifically, because they may have different ways of actually doing it. But essentially, they have to carry out your execution order. So when you buy, they have to buy and they have to sell whenever you do. And essentially, it's held within a client account, but it's assigned to you within that client account. That's typically how it would work. I hope that answers the question. If not, let me know. But you know, Trading 212 might do it slightly differently to Stake, might do it slightly differently to eToro, depending on how the internal operations and internal systems essentially work. Warren, hi Pete, love the videos. What would be a good asset allocation for a 20-year-old looking for higher risk, higher returns? Really, really good question, Warren. Again, I can't really give you a direct answer for this because asset allocations work in different ways. So if you're using Hargreaves Lansdown, they might have a completely different asset allocation to someone like Vanguard, for example, or Fidelity. If you're looking at long-term high-risk investment, though, I think most portfolios or most funds will probably have a maximum of about 80% equities, then 20% in something else. Maximum. I mean, I have seen 100% equity portfolios before, but that's literally for, well, actually, to be fair, there is one on Vanguard, to be fair, that has got near enough 100% in equities. So it really depends on who you use. Because I remember looking at one maybe on yesterday. There is one that is proper high risk. I think it was like a 6 out of 7 with them. But the question is going to be, are you willing and are you happy to go into a fund with 100% equity, for example? Do you have the appetite for that? That's the real question. So it's going to be depending on who you essentially use. And what I would always say is read the fund fact sheets, read the key investors information document, just so that you understand exactly how it's invested, where it's invested, in what proportions, and you kind of get an idea of what their top 10 holdings are. That would be my take. But if you want to take high risk, 80%, 70%, it really depends on what you want. If you want to go into a Vanguard with 100% equity, you can do that as well. But it's all about what you think is suitable for you. Right, okay, so Hagar, don't forget the 325,000 nil rate band on death estate for the inheritance tax question. Yeah, I mean, that's inheritance tax, but if you're gifting something within 7 years, it falls outside of your estate anyway. But if they die within 7 years, then they have, there is a step down in terms of what tax they essentially have. But when you're passing assets over to loved ones, you do have a £325,000 nil rate band, but you also get an additional, I think it's £175,000 now residence nil rate band for properties being passed over to beneficiaries or loved ones upon death as well. So whilst the inheritance tax is 40% and it's quite hefty, there is quite a bit of an allowance. So it means if you're a married couple, you can pass assets over to beneficiaries up to £1 million, which is pretty decent. Pete, question, mate. Do we have to declare a stock and shares ISA to anyone? You automatically declare it, mate. So the minute you open a stock and shares ISA, they ask you for your national insurance number. That data gets fed back to HMRC. So HMRC, that's how they track whether you've paid in more than £20,000 into your ISA each year. So you're automatically declaring it. You don't need to declare it for tax purposes, though. So that's fine. You have yours with Trading 212. That's fine, mate. I mean, HMRC will know that you have one, and they'll be tracking how much you contribute into it. But you don't really need to declare it for any reason because it is tax-free. I'm strong. I'm 15. Is there ways I can get involved in making money smartly? Depends what you want to do, mate. And the fact that you're 15 answering this actually fills me with joy, mate. Hang on 1 second. Al's just mentioned something here. Okay, let me just answer your question really quickly. Yeah, I mean, look, mate, it really depends on what you want to do. Yeah, I mean, you can start investing early. You can't invest at 15 just yet. But, one thing I would say is, if you are going to get a job and you get to the legal age where you can actually start investing, get into the habit of just investing little. Like, even if it is like 10, 20 quid a month, just start investing it, put into an ISA, just save money into it. I don't know what your propensity is in terms of, whether you want to go into business for yourself or what you want to kind of like do in the future. But the fact that you're answering these questions is really, 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 really important. Investing is a great way that you can do that. But I would say, just start and form that habit really, really young. And, just invest. ISAs are really, really good. Do some research around that. I don't know whether there's any skills or anything like that you have. You may not actually have any at the moment because you're only 15. You're trying to figure out what you actually want to do. But, investing is a great way, and just start early. Little bits, little often. If you invest very little now, you continue to do that all the way through adulthood, mate, you're going to be set for life, big time. So, yeah. Right, let's have a look. See if I can catch up with myself here. Robbie, any recommendations on how much to contribute to an employer pension scheme? Is the best option to match up to what the employer puts in and then invest elsewhere? Really, really good question. Okay. So when you look at pension specifically, there are rules. So your employer now has to contribute on your behalf. The minimum they have to contribute is 3%. The minimum you have to contribute is 5%. So that's 8% minimum that has to be contributed into a pension now, just to start. What I've always talked about in the video, I think it was on Friday, where I was talking about early retirement, is it's worthwhile asking your employer whether they match. So what matching essentially means is they will say, right, Robbie, if you go from 5% to 10%, we'll match you at 10%. Then get them to do that, because you don't want to leave money on the table. So that if they have a matching scheme, try and see what the maximum is that they will match. Just put the money in. In terms of investing elsewhere, it's worthwhile considering the cost. So if you're in a workplace scheme, typically they are very, very cheap, because the government puts a cap, well, the FCA puts a cap on how much the companies that administer and manage a company workplace scheme can charge. So there's a cap on that. I believe it's 1%. They cannot charge more than that. So therefore, it's relatively low cost, really, really low cost compared to if you went somewhere else where you might be looking at over 1% to get it invested. What I would say is that, look at what the cost prices are there. If you do want to go and set up a personal pension or a private pension, do the cost comparison. But definitely consider that if you're in a workplace pension scheme, you do not want to be in the default scheme, ideally, because the default scheme will just be run-of-the-mill. Some of them perform okay. A lot of them don't perform well at all. So you definitely want to ask the question of whether you're in a default fund and get an idea of all of the options available to you. Because it is pension and it's for retirement, you probably have 10, 15, 20 odd years. You may then want to consider maybe pushing it into something a little bit more high risk. So moving from a default option into a higher risk option. So those are some of the considerations that I think are really, really important, Robbie, when it comes to your workplace pension. So definitely get them to match to the highest amount possible, and then do the research around the cost for whether it's better for you to continue contributing into the workplace scheme or having a private pension separate. The cost will be a key factor in it, and also the options you have to invest in as well. Hope that answers the question. If not, let me know. All right, where am I? There's a discussion going on here, so I'm just going to skip those and have a look. What was your take on CashFX? I've already answered that question. You'll be able to view this back, so I'm sure you'll be able to find that answer. But yeah, CashFX, Jesus Christ, there's a lot of questions essentially on CashFX. So yeah. Michael got in to Neo at $6. It was very high risk reward stock, but the whole EV sector there is so much growth opportunity. Thanks for advice, Pete. I really enjoy your YouTube content and podcast. Thanks, mate. Really do appreciate it, Michael. Mate, you've done really, really well getting at $6. I mean, that's phenomenal. That's really, really great. Dexter, let's just get back up here 1 second. It's jumped up. Let me just find myself, guys. There we go. Good evening, Pi. I have a pension where I pay 12% and they pay 3%. Other older pensions I still pay into, which seems to grow around 5 to 6% since inception. Also started investing on Trading 212. Okay. So I'm guessing, Dexter, your employer doesn't have a matching scheme then, which some companies can't afford it. I get it. But yeah, 12% contribution is amazing, mate. I mean, 15% as a whole is really, really good. If you've got old pensions performing at 5 to 6% aren't actually that bad. The question will be, have you consolidated them into one place, or are they still in separate places? Because it may be consideration to get them all in one place, as long as you're obviously able to make sure that you can monitor them on a quarterly or maybe even annual basis. Am I best to continue with all of those, or am I better just paying into one? Right, okay, so you can move like your old pensions into your current one. There's nothing wrong with that. So that could be a consideration for you. You just need to go to your HR department, find out who administers the pension, and then ask them to do a transfer from your old ones into the existing scheme. You can do that. And again, cost might be an issue there. So if you're with, I don't know, let's just say you're with an old provider who is using, I don't know, Viva as the administrator, you want to get a sight of how much you're paying for the old company managing that pension and where you're going to. You don't want a massive like 0.5% jump. It might be worth it if they're getting better performance, but it's definitely a consideration to make. Let's have a look in here. There's a conversation there. Right, let's have a look. Right, Bavari, how do companies across the funds, right, how do companies access the funds from the client account? All right, so with that, you give them permission. So the minute you open an account with them and you deposit funds, you're automatically giving them the permission to be able to access those funds to then execute a trade or purchase into a fund for you. So that all of those will be in the terms and conditions in terms of what they can and can't do, and over what period of times they will take to actually invest your money. So if you have it, like whenever you open an account, that will all be in the terms and conditions. I hope that answers the question, Bavari. Just let me know if not. Call sign. What's your thoughts on GoPro and as a buying shares without doing research yet? And from what I know from my hobbies, they seem like a great company, constantly developing new tech and loyal customers. See, I don't know anything about GoPro, if I'm completely honest. I know that they are big when it comes to like filming. I've got a friend who's a skydiver. He loves GoPro. Absolutely loves GoPro. Even in the videography world, even like the little miniature cameras that they have. Great, really, really popular and really, really good quality. I did just as we came out the lockdown, before we came back in, I did a day of filming for a project, and one of the guys had like a little GoPro, one of the new GoPro releases. The quality of the image from that was absolutely amazing. It was such a tiny thing as well. So I think they're a really, really good company, but I don't know enough about them to be able to give like a real good insight or my thoughts on them, because I don't know enough about them. But I do know that they're a very, very good company, and they do have a very, 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 very loyal customer base too. Any ideas on the FNGU ETFP? I've not had a look at it, so I can have a look at it and come back on the next Q&A. But I've not had a look at that ETF specifically, so wouldn't know. Yeah, they do. Yeah, so Vanguard does have a 100%. They have a 100% equity on there. Fitz, how do HMRC send us tax? Do we have to contact them, or will they send a letter after getting invested? No. Okay, so Fitz, like, it's your responsibility to report your tax to HMRC. They don't send you anything. So if you've been investing and you're investing outside of an ISA, and you've sold some stocks and you've had like either dividend payments or capital gains payments because you've sold stock and you've made money, it's your responsibility to complete a self-assessment form every single tax year. You have to do that. HMRC are not going to chase you. It's your responsibility to do it. So the best thing for you to do is, if you have been, holding investments that you've sold and got dividends and all this kind of stuff, you need to speak to HMRC and talk about filing a self-assessment, because you need to do that. It's your responsibility to do it. They're not going to send you reminders. Marcus, what stocks do you go for in your Trading 212 ISA pie? I don't have a pie with Trading 212, to be honest, Marcus. I've not set one up just yet. But in my Trading 212, I have, in Trading 212, what have I got in there? Let's have a look. Where is it? So in Trading 212, I have got Tesla, Apple, Facebook. I have got Under Armour. I have got... Oh, here we go. I've got EasyJet, I've got National Grid, I've got Smart Direct, I've got Unilever, I've got Virgin Galactic, and so that's what I've got in Trading 212 currently, but they're not in a pie because I've not built one just yet. Len, how does transferring your stocks and shares ISA from one provider to another affect compounding, i.e. the longer the time, the greater the compounding? It shouldn't really affect it at all. Well, depending on how long the transfer takes. So if you're with a provider, for example, you're transferring stuff over and it takes them obviously like 2 months to transfer, then you're not going to be invested for that period of time. So you might lose out on a little bit of growth. But if you've got a provider, for example, that transfers it pretty quickly, then, because essentially when you transfer, what they have to do is they have to disinvest, transfer over, and then the new place that you have it then reinvest in those same companies. But literally is what tends to happen. So it depends on how quickly that transfer happens. But unless it takes a really, really long time, then there shouldn't really be that much of an impact on compound interest at all. I mean, compound interest is best realized over the longest term. So as long as you're not out of the market for too long, then you should be fine. What my thoughts on ARK Invest? Warren's asking here. ARK, mate, Cathie Woods is an absolute beast. I was watching a video of her a couple of weeks ago, and just the way she talks about how she looks at it, how she buys stocks and their outlook and the analysis they go through is just freaking incredible. I mean, it's some of the best stuff ever. I follow on Twitter as well. She's a really, really good source of like information if you follow her, and it's interesting to hear some of her thoughts on some of these things as well. So Cathie's great. Video tip: rated investors on eToro and risk analysis. Interesting. Okay, that might be one I could actually do. Definitely. Let's have a look. There's conversation here going on. Let's have a look. Where's the next question? Let me see if I catch up with myself. Marcus, you bought shares in Pfizer and BioNTech. Mate, that's a really good call. Really good eye, mate. I bet you've done well out of that as well. Ian, what about salary sacrifice within pensions? Salary sacrifice is really, really good, mate. Especially if you know you're going to get like, a pretty good bonus. That can really top you up. and can help you get to the point. I mean, I would always say that there are always benefits with that because you get the tax benefit too, in the fact that it's pretty much taken at source as well. So if you're in a position where you can do a salary sacrifice, definitely do a salary sacrifice. Is one of the ways that you can definitely also reduce your personal allowance. Your tax bracket for personal allowance, because if you earn over £100,000, you start to lose your personal allowance. So people over that threshold, typically they would use salary sacrifice to try and keep as much of their personal allowance as possible. Because when you hit over 100,000, for every £2 that you earn, you start to lose £1 of your personal allowance, of your £12,500 personal allowance. So salary sacrifice can be used in that regard if you're at that level of earnings, to help you reduce your tax bill, essentially. Where are we? Okay, caught myself here. Right, okay. Bound to pile a load of cash into recovery stocks if vaccine news is positive. Yeah. Where are we? Okay, so George just asked a question. I'm 26, never invested in my life. Where do I start? Right. So for you, mate, the most important thing is that you get an understanding of how things work first. Really, really important. Like, if you're going to build a house, you need to have a really strong foundation, right? So for you, understanding how investment works, understanding some of the language, understanding some of the principles, really, 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 really important. And just understanding what options you have, the providers that you can use, that's crucial for you, because you can very easily go onto YouTube and just get lost in just so much detail and so many acronyms, so much jargon that you can easily then just give up. There's loads of free videos on my account that you can watch that will get you up to speed. I've got an investment course which you can also take as well. You can take it in your own time. It's 4 chapters, 14 lessons. You can buy that independently, or you can actually just join our membership group, because I'm taking that membership group through the investment course, group tutoring essentially. And you have access to me via the Discord group as well to ask me questions on your journey. We can help you kind of like select your provider and all this kind of good stuff as well. But information and foundation is crucial first. Have a good understanding of what the language means, how it all works, the fundamental principles. That's really important. Download a couple of apps. Just kind of, find out what they're all about. Read maybe some of their literature. If you go on to meet people like Hargreaves Lansdown and Vanguard, they have like learning centers where you can read what an ISA is, that kind of stuff. Watch videos on those kind of things. You need to familiarize yourself with concepts, principles, language, and what all these terms mean. So that'd be the best way for you to start. Once you've done that, then, pick a provider, and you need to be looking at your ISAs first because of the tax advantages that I've spoken about a number of times on here. And that will get you going to actually begin on your journey. So you've been researching for about a month now, not sure what I should be doing. Yeah, I mean, it's very, very simple. Yeah, I don't doubt that, mate, because there's a lot of information out there, and it's hard sometimes to be able to decipher what you should and shouldn't be looking at and what does and does not matter a lot of the time. Nathaniel, do you invest in anything else outside of stocks and shares? Also buy and resell shoes, and I'm wanting to invest in Jordan 1s. Oh, dude. The guys from Stake would absolutely love what you just said there. I don't really invest in anything else outside of stocks and shares. See, I do like trainers, right? I do like shoes, but I'm not into it to the point of like buying Jordans and Air Force Ones and stuff like that and trading those. It's not really my interest. But mate, that's a booming market. If you get some limited edition ones, I mean, Jesus Christ, these things go for tons and tons of money, mate. And it's funny because when we were talking to the guys at Stake, they were saying one of their visions is they want to be able to bridge the gap between invested and culture. And they used the trainer market as an example of that. So if you get like a really decent pair of Jordan 1s, right, limited edition, that holds a certain value. So that's worth a certain amount of money. then you sell it on to someone else for profit. And those principles of how much it's worth and how much someone else is willing to pay based on demand and how rare the shoe is pretty much exactly the same with the stock market. The principles, the fundamental principles are exactly the same. So it's good to see that parallel actually in this conversation this evening. Is great. Bharari, what form did you mention that I have to fill out for American companies that dividends? So you need to fill out a W-8 Ben form. So a W-8 Ben form is basically a form that you need to fill in. So if you hold stocks in any American companies that pay you dividends, before the dividend payment hits you, you will pay the American government will take a 30% tax off that dividend payment. So in order to reduce that from 30% to 15%, you need to fill in a W-8 Ben form. So W-8 BEN form. You do that within Trading 212, Stake, eToro, or whoever it is that you're using. They should prompt you to fill one in, but you have to fill one in if you don't want to pay 30% tax, US tax, on your dividend payments. Do you know of any good mortgage brokers? Yes, I do. If you message me on IG, I can point you in the direction of a couple. That will be able to help you. I do know quite a few. What do you think about crypto? This came up on the last one. Crypto is important. I think crypto at the moment isn't still recognized as a viable asset class, which I think is a shame, to be fair. But you can't ignore the history and the performance of Bitcoin. You just can't. If you're going to invest in it, I think it's really, really important as well that you have a plan. I know people who have, they only hold Bitcoin. They don't hold any traditional stocks. They don't hold any traditional shares, but they are really, really, really into crypto, like massive, massive supporters of crypto. You can't ignore it. I would say that, it's worthwhile having in your portfolio as an option to help you diversify as well. Hey Pete, what's your thoughts on buying Chinese stocks? Absolutely, you can buy Chinese stocks. I would say buy Chinese stocks if they're on the US market. Really, to be fair, if you're buying Chinese stocks on the Chinese stock market, they can be really dodgy when it comes to reporting sometimes. And yeah, the Chinese don't necessarily like to play by the rules sometimes. They do what they want to. They don't regard or have a high regard for regulation and stuff. So NEO's on the US stock market. I just bought NEO. There's nothing wrong with buying them, but yeah, just be mindful that, preferably you want to buy them either on the US market or the UK market. If you're going to be buying it on the Chinese market, just, make sure you're doing your due diligence is what I'd say. And if you're buying it as part of a fund that's invested in China, at least there's been some real due diligence done on your behalf. You really need to be careful. You need to do your due diligence, I should say, if you're buying Chinese stock in the Chinese market. Pete, I'm currently out of the UK and it won't let me donate. No, don't worry, mate. It's all good, bud. I appreciate you anyway, because you always do chip in on a weekly basis on a fortnightly basis when we come along. So really do appreciate you, mate. Thank you. Francis, could you do a video on the step-by-step process of investing in index funds? Where would I go to set up an account, etc.? I can do that. Actually, I will write that down. So one of the things that I'm doing at the minute, I don't know if you guys have noticed, we're doing a series on Hargreaves Lansdown right now. The intention is to do a series on Vanguard as well. So once we're done with Hargreaves Lansdown, we will move to Vanguard. And then after that, we'll probably move to somebody else so that you kind of get an idea of what to look for. But I can definitely do a step-by-step video on opening an index fund and what to look for and stuff like that. I just need to be mindful. I don't want to keep opening investment accounts. I've already got like 6 already open just from reviews. So I'll see what I can do on that point. But I'm going to write that down now. Step-by-step process of investing in index fund. Okay, cool. Prashant, okay. How would you say the future of Boeing will pan out given post-pandemic rise of travel, but air travel restriction policies for environmental reasons? It's an interesting one, mate. Look, I think with all companies at the moment, they're going to have to adapt. the question is, what efficiencies are they going to realistically be able to introduce into air travel? That's going to be the big question, because we know that the automotive industry is going towards EV, but that doesn't work in the air, especially over long distances. So you can talk about pollution and all this kind of stuff and environmental impacts, but what is the realistic jump that you would make in that sector to really be able to satisfy those environmental reasons? It's really, really hard, and I just don't know what technology and what developments there are in that space, because flying through the air is a feat. It's proper. It's proper. So how they introduce those kind of efficiencies, I mean, you can then have a look at, okay, cool, so is there something they can actually do from the actual oil point of view? And actually, because you've got SpaceX sending rockets into the air, and the byproduct of it is water. So are there things that they can introduce there? Are they doing anything about it? If you're going to be buying Boeing stock specifically, those are the questions to ask. That's the research that to be doing. Are they partnering with anybody that actually helps them address that specifically? Because if you look at SpaceX and that technology, it is there, but is it applicable for air travel? Who knows? With Boeing, as big as they are, you would like to think that a company like that will adapt. It will adapt. It will still be here. It will still survive. Is it a long-term punt? Possibly, but the big question would be for how much of your portfolio, how much of your money do you put into it? Because this is the key thing. Again, when you invest in, diversification is important, right? Risk management is important. So how much of your money do you have in a particular company or a particular sector? How do you allocate that? That's where you need to bear in mind. If you look at some of these funds on Vanguard, you have a look at the sectors. There are numerous sectors. There are numerous options that they have invested. Sometimes each one that's listed won't have more than 10% holding. And these are the principles that you need to be mindful of. So if you're building, say, for example, like a pie, for example, like Marcus was asking me about, the reason why I don't have a pie is because I hold very, very little in individual stocks. Even though I hold a good number of companies, I don't hold all my money there. Most of my money is invested in funds. So I know that I'm getting diversification across different sectors, and I don't have more than 10% or whatever it is, depending on who I'm using, in any particular sector or any particular fund or ETF. These are really, really important. So if you're looking at Boeing, how much of money do you assign to it with the guise or the view that you're taking a punt, hoping that they will have value and they'll adapt and they'll still be around and profitable in 10, 15 years time? So it's an interesting one. It will be interesting to see what they're actually doing from a technology point of view on the environmental side, because I think the travel restrictions, depending on what happens with the pandemic and the vaccine, those will lift. It will take some time, but the environmental question is the long-term question, the long-term problem that they need to solve. What's coming up on the podcast tomorrow? Tom's asked that. Interestingly, I need to record that podcast right after this, actually, to be fair. And it's going to be a reactive episode, because I did a talk on Wednesday this week. There was a comment someone made when I asked a question that stuck with me. And then I got a message this morning that even reinforced that statement even more. So I'm going to give my views on something that may not be popular opinion, but I think is really, really important. I've spoken a little bit about it, so that will be tomorrow morning. So yeah, you're tuned in, Tom. You might be surprised, you might not. Bavari, thanks, Pete. Do I have to include American companies in my self-assessment to the HMRC if I do a W8 bend form? So if when you're reporting to HMRC, you're going to be reporting your overall returns or your capital gains, for example. So that's an overall number. You don't have to break it down according to numbers. According to companies, HMRC is basically interested in the numbers and the numbers only. So you don't have to list like, I got dividends from Apple, for example. You need to keep that for your record, because obviously your capital gains allowance is £12,300, right? So you need to know if you've sold Apple at any given time at a certain amount. You need to know that for your purposes, but you don't need to really show that to HMRC. They won't really be interested in that. They'll be interested in the bottom line number. Christian, hi Pete. I like your content, really valuable information. Thank you. What are your thoughts about real estate investing as a form of getting cash flow? What are the tax incentives with mortgages? Right, so real estate investing for cash flow, really, look, it is a viable option. It's not something that I dabble into myself. And tax incentives, the tax incentives on things like buy-to-lets and all this kind of stuff now, they've been retracted massively over the last 2-3 years. Landlords have taken a bit of a hammering, and there's a reason for that. If you're looking at the UK market specifically, what is the one thing that we know we don't have? We don't have enough of residential properties. There is a housing crisis. So one of the things that the government has tried to do over the last 2-3 years is basically get landlords to relinquish property so it can go to first-time buyers. So there aren't that many tax incentives if you're looking to invest in property as much as there were before. That isn't to say that there are none. There are still some, but it's certainly nowhere near as good as it is before. Real estate and property isn't my area of expertise, so you would really need to speak to someone in that arena specifically. There's a guy on Instagram who I know really, really well. He did an event with me last week. His name is Paul Roberts. Go and follow him because he is a property investor. He's been a property investor for the last 20 odd years. He's really, really knowledgeable. I mean, his property portfolio is ridiculous. It's in the millions now. He's got property all over the place. But his name is Paul on Instagram. It's Paul_Anthony_Roberts. Follow him. He'll be a really good source of information for you. Okay, what's a pie on trading 212? So a pie on trading 212 essentially allows you to build like a visual representation, right? So it's like a pie chart, essentially, of all of your holdings. So for example, if you've got a lot of money in Apple, it basically breaks down your investments into a pie chart effectively. So you can start to build it from a visual point of view to know, well, I've got quite a bit in Apple or quite a bit in the tech sector, and then you can start to have a visual representation of it. That's all essentially is in Trading 212. Francis, could you do a video on useful books to increase financial acumen? Yes, I can. If you want a really good investing book that just came out, there's a book called How I Invest My Money. It's by a group of advisors. One of them is a close friend of mine, Tyrone. It's on Amazon right now. I'm waiting for my copy to arrive. It should arrive next week. Just released last week. But it's a book by financial advisors or investors, professional investors, and they basically talk about how they invest their money and some of the ideas and principles behind it. It'd be a really, really good read. I can't wait for mine to arrive. But that will be a good one. But yeah, if you search How I Invest My Money on Amazon, it will come up. Saying I'm good, thank you very much. Daniel, I've been using Plum Invest and the returns are okay. And I like the automated deposits. I watched your Plum video too. Long term, would you advise moving my stocks and shares ISA to Vanguard directly? That's completely up to you, mate. Vanguard might be a little bit cheaper. But with Vanguard, you will need to pick the option that you actually go for. It's totally up to you, mate. What I would say is if you're going to do that, make sure you do a transfer. Just don't cash in or close that ISA with Plum and then withdraw the money and pay it into Vanguard. Go to Vanguard and ask them to transfer the ISA for you. That will be the easiest way for you to do it. And it will just mean that you won't run the risk of breaching any ISA contribution rules. Uga, right, let's, what's you saying here? What are the factors you look into when investing into a company? For example, do you go by any specifics in their balance sheet, profit and loss, cash flow statement, or any external factors? All of them, mate. Balance sheet, telling. Profit and loss, telling. Expense ratios, really, really telling. You go through all of the financial metrics. You have to, because it's, you know, you're looking to invest in a business, mate. So you have to make sure that they are profitable, that they have good financial practices behind them. So you need all of that, but you do need external factors around what sector they're in, any challenges that might be coming down the track for them, their competition, for example, how they make money. Are there any threats to how they make money? You know, all these things are really, really important, but the financials do form a really important part of the research that I do, because it's really, really important. Yeah, so Bavaria, yeah. So for example, if you have, if you're selling any stocks, so you have any capital gains on stocks, for example, right? So you're making money on stocks and you're selling them. Your capital gains allowance is 12,300. So you're going to pay no tax until you breach £12,300. At that point, you're going to have to pay capital gains tax. So the important thing is that you keep track of what you're selling, what gains you're having, so that you can track it as you go along, so you know when you hit that 12,300. You need to write that down. From a self-assessment point of view, you don't need to essentially declare if you're below it, but most people will err on the side of caution and just do one anyway and let HMRC know that, yeah, they have sold some stocks, but it is below this amount, and they just issue a zero due essentially. So I would err on the side of caution, fill one in, a zero return, so that at least it's on record, so that you don't have to have, HMRC potentially come back and saying, well, let's have a look at the last 2-3 years. Then you're scrambling around for the information. Err on the side of caution. What time do these live start? They normally start at 9:30. So we're at 11, an hour and a half in at this point in time, and we're almost at the end of these questions. So. Thank you, Pete. Really appreciate it. No problem at all. Sophie, is the Trading 212 ISA account earning capped at 20,000 annually or in total? No, right. So your ISA allowance is £20,000. That's how much you can contribute into it. It's not earnings, how much you can pay in as a contribution. So your limit is £20,000. If you invest it into a Trading 212 ISA and it grows to £10,000 because you've had some really good years in returns on investment, that's completely fine. You cannot pay in more than £20,000 every tax year. The tax year runs from April the 6th to April the 6th. Sayon, can I have a shout out? Yes, you can have a shout out, mate. Good man. Sabrina, Trading 212 is a good platform. They are good. Yeah. See, I've had a few people leave some comments on there saying it's a scam and stuff like that and everything. I mean, I guess apps do have, sometimes they do get bad raps and people do have bad experiences and stuff like that. So, you do have to take those kind of things into consideration as well. But I've used them for a while. The things that are important to me when I look at providers, being regulated or authorized and having protections are in place, that they all have. And my experience with them has been good, although they did have a little bit of an issue this week trying to log into account. But I think that was widespread as well because I couldn't get into my Hargreaves Lansdown either. So there you go. I use Moneybox. What are your views? Moneybox is very, very good. My Moneybox video review actually is one of my most popular videos on here. Moneybox are great. I use them for a period of time. Really, really good for the roundups. You could say that they're probably on the expensive side maybe, but the apps are very, very good. Very, very intuitive. Very, very easy to use. So yeah, really, really good. DJ, politics aside, have you heard of Nigel Farage's Fortune and Freedom? Any thoughts on that? Never heard of it, mate. Never heard of it. Give me the rundown on it, though. I might Google it and see what he has to say. Hopefully, he doesn't talk as much twaddle as normally comes out of his mouth. Hopefully, fingers crossed. Right, okay. Thoughts on crypto as a long-term investment? Yeah, crypto as a long-term investment could be worthwhile, depending on what crypto you go into. Bitcoin's quite mature now, and it's probably the forerunner, isn't it? You've also got Ether, as the secondary one. There's lots of new coins that keep coming out. So XRP, there were other ones as well. I've got one coin, I can't remember what it's called now. But the thing is, Bitcoin is so large, that's where most of the money basically goes. So as a long-term investment, really, really good. I think you need to pick the right one though. Bitcoin is the forerunner. Ethereum is probably the secondary one that you would think of as being big as well. So yeah. Robbie, just pre-ordered. Good. Yes, mate. It's it really looks like a good read. And Tyrone, who's my mate, he's been on my channel and on my podcast. He's a Bitcoin guy. Like he's a proper Bitcoin guy. He's contributed to that book. So I can't wait for mine to arrive because yeah, it will be a really good read. London dude, between one provider, stocks and shares ISA, for 4 years and will soon transfer to Fidelity. Will I be in my 5th year of investing with Fidelity and the compounding over that time in... Mate, you might have to reword that for me. Let me just take a second. Being 1 year with one provider, stocks and shares for 4 years, and will soon transfer Fidelity. Will I be in my 5th year of investing with Fidelity and the compounding over that time intact? Well, I don't know whether you're going to be transferring. I'm guessing, are you transferring or are you keeping? I mean, the whole point of compound interest is that over the course of time, you get interest on the interest that you've earned over the period of time. So again, as long as you're not out of the market for any extended period of time, you're going to be fine. You might miss a little bit if you come out of the market, but as long as you're invested in the market, you're going to get the benefit of compound interest. Always, as long as you're invested in the market. You're not going to benefit from compound interest if you come out of the market or you disinvest. Question, hi again, Pete. What advice for building up a really good credit score would you give us? I have 2 credit cards open and app for tracking my scores. Okay, right. Good question on this one. So for your credit score, there's a few things actually. Right. So first and foremost, make sure that you are tracking your credit score on a monthly basis. If you're doing that on an app, perfect. ClearScore is really, really good as an app to go to. The second thing is, and this is, so I did accountability circle on my IG like this evening with Paulina, and Paulina, she's been looking to improve her credit score for ages. And she recently took it really, really, like literally, she attended my property event last week. This week, she actually went down into her proper report. So she bought the Experian report and she found that on her report, it's been stagnant, or her score has been stagnant for a while because she's had incorrect addresses on her credit score. So the learning from that is, yes, monitor your score, but also go back into your actual report. So ask for your report, get a copy of it, and update any addresses on file. So if there are old addresses on there that maybe might have been incorrect, get them off. If you haven't been registered at the correct address, or there's a mistake in the address, you need to get that up to date. So definitely do that, because that will help massively. Companies need to know where you are. They want to be able to find you. So as much as, you know, an address might sound like it's not a big deal, it is a big deal, because it just means that you have roots somewhere. So if they can't ascertain or confirm that information, then obviously your score is going to suffer. So your numbers are going to suffer. The second thing is, if you've got credit cards, don't just use it and pay the minimum payment. That's the worst thing you can do. Use it, pay it off in full, and then use it again, and do that on a monthly basis. If you are going to hold a balance on there, make sure that you have your utilization. Try to keep it around about 50-60%. They don't like it if you're using like 100% utilization or 80-90% utilization. It throws up this flag that you've got really poor money management and you might be struggling. So if you are going to hold a balance on there, make sure that you hold a balance less than 50%, and make sure that you're paying more than the minimum payments. You do that and you should be fine. But yeah, if you use the credit card and just pay it off on a monthly basis, you do that for 6 to 9 months, you should see a really good move in your credit score as well. Where are we? Okay, cool. Last few questions. Nathaniel, sorry. What are your thoughts on investing into an ISA through Vanguard versus a bank such as Santander? Pros and cons for both. Right, with Vanguard, you're going to get way more choice. With a bank, you're going to get a limited choice, really, if you have any at all. Vanguard will definitely be cheaper. Santander will definitely be more expensive. You won't get much help with Vanguard in terms of, like, you're not going to be able to, like, get any advice from people. You won't get that from the bank unless they have financial advisors in bank, which I don't think Santander do anymore. And yeah, look, go with Vanguard. If I had to choose between the two of them, I would go with Vanguard and not with a bank. Banks aren't set up for this kind of stuff anymore. They're just not. They're really, really not. So Vanguard will be a better option. With Vanguard, you're going to have access to more learning resources as well. So you could at least read or have a PDF that they produce or a video that you can watch about what you're actually looking at. You can read the front fact sheets, the key information, the key investors information document. You can read all that stuff. With Santander, you'll get next to zero help, if any at all. And that's just my thoughts on banks, because I don't have a high opinion of some of the big banks anymore. But that's just my personal opinion. If it was me, I would go with Vanguard. How do you know when is the right time to sell your shares? Mate, there isn't. It depends on you, mate. I mean, why did you buy the share in the first place? Did you buy it because you had a plan to cash it in 3 years or 5 years time? Did you buy it because you want to cash it in at a high? Did you buy it because you wanted to get a short-term gain from it? What's the answer to that? Did you buy it because, for example, with Tesla, Elon's left the business and you don't think the company's going to do well without Elon? It's really down to you and what you feel is best for you and your reasons behind it, really, to be honest. So when is a good time to buy, to sell a share? Only you get to decide that, mate. Ideally, you want to sell it at a high and not at a low, to be fair, to be honest, if timing works out in such a way, but you get to decide, mate. T, thanks for another great session. Thanks, mate. Appreciate it, Sabrina. London Dude, you should keep your current account ISA and just open another, as you can open one each year. Yes, you can. Or you can just do a transfer, like I said. Robbie, any thoughts on the trade-off between saving for a house and investing for your ISA? Struggling to determine how much to set aside for a deposit and how much to invest. A trade-off between saving for a house and investing in your ISA. I don't think it has to be a trade-off, personally. I mean, look, you can save into a lifetime ISA and get some help with your deposit for that. If you do amass money into an ISA, there's no reason why you can't then use that money to buy a house as a deposit for your house. So it doesn't necessarily have to be a trade-off or anything like that. I think what's really, really important, though, is that you understand how much you actually need to acquire a property. So how much deposit do you need? How much do you need to set aside for legal fees and so on and so forth? How much do you need to set aside for stamp duty? You can put all of that money into an ISA, including a lifetime ISA. There's nothing wrong with that. It doesn't have to be a trade-off. If anything, the ISA will be the vehicle that you use to help you buy your first property, I guess. So, yeah. Can I invest even if I'm still a student? Yes, you can, as long as you're 18 and plus. You should still be able to invest with most of the providers that are out there. So being a student doesn't prohibit you in any way, shape, or form. Right. Okay. Cool. That's all of the questions, guys. Amazing. Right. So it's been about coming up 2 hours now. I appreciate you being here. Thank you so much. The next live is going to be on November 22nd. Actually, that's my birthday. Oh no. Yeah, it is my birthday. I didn't realize my birthday was on a Sunday. Hang on a minute. Let me just have a look at my diary. Yeah. No, actually, no. Sorry. It's on the 29th. It's every 2 weeks. I thought it was a week away. It's every 2 weeks. So it will be after my birthday on November 29th. So we will get together again then. If in the meantime, like I said, you have any questions, you know where I am on IG. Feel free to ping me a message there, or feel free to leave a comment on the videos. I do always try and make sure I get back to all of the comments that are put on the videos and stuff. So I really do appreciate your 2 hours, almost 2 hours this evening. And again, if you have anything, need anything, give me a shout. Until next time, catch you soon.